Well, the AI-related stocks have been pulling back a little, while some older tech names doing a little bit better, diverging. Joining us in the latest in the tech, or on the latest in the tech sector, Ray Wang, Constellation Research Chairman and AI Forum co-founder. How you doing? Been a
I'm
while.
doing great. How you doing?
This is our. It's like episodic. People wait for you, like. Instead of when you can't binge something on streaming, then you have to wait every week. I think that's sort of what happens with you, right? People are like, when is Ray going to be on again? I'll tell you something, though. You don't believe there's an AI bubble. You point to $380 billion in data center spending, but then you say the top 10 tech stocks are $25 trillion, and the U.S. economy is $30 trillion. I mean, that sounds like a lot of concentration that could be. Those seem to be opposing viewpoints there. Sounds like a bubble, but you say it's not a bubble.
It's a great point. And what I'm trying to say here is what we see in the old tech side of the house, you see in the public markets. What you're seeing on the new tech side of the house, it's in the private markets. It's in the valuations of OpenAI and Anthropic and Perplexity. It's in the evaluations of Midjourney and Cursor and Replit. These are companies that have not come out. But the one thing that they have that's different in an AI native versus the old companies is that these companies are running super efficient. It could be 20 people doing 200 million ARR, 10 million people doing 200 million ARR. But the numbers are staggering in terms of the revenue per employee, if you're thinking about what they're doing, profit per employee, and the amount of digital labor. They look so different compared to the way we report metrics today. And it's the old companies and the old guard that actually is going to have to conform to what the new metrics look like in terms of the percentage of digital labor, in terms of how they actually look at growth. It's not a 20% growth or 30% growth. These companies are growing at 10x, 100x in terms of their ability to deliver. And that's what the valuations are going to look like very differently going forward, which is why, on one hand, you look at staggering numbers. On the other hand, you're like, these numbers are just the beginning.
Yeah, and it's like a pond or a rock in a pond. It goes out like this when you throw it. And all these companies out here that you don't even think are AI companies, it's going to benefit just about everyone, in your view. Cisco, we had Lisa Su on yesterday. I mean, look at AMD, which we thought, NVIDIA was the GPU master, and I think it's up 17,000%, we said, since she took over 11 years ago.
It is. You're definitely right. And AMD showed that there's money to be made despite NVIDIA's dominance in GPUs, 35% year-over-year growth. That's what she's forecasting for the next 3 to 5 years, which is incredible when you think about just growth in general. And you look at Cisco's beat on the street. They finally have 4 quarters of revenue beat in a row. And what's driving it? It's really the data center part of the business, but they also have networking with NVIDIA with an Ethernet switch based on NVIDIA silicon. And you look at other companies that are growing at the same pace. You look at IBM in the business. You look at Oracle coming back on the data center side. This is just the beginning of that. But this is more than a boom in just 5 to 7 stocks. It's going to be a boom that spreads out to the rest of the tech sector as they go through the modernization program as well.
Would you be moving out, though? Is this what we've seen in the last couple of weeks? Does that make you think you need to go deeper into the weeds with AI and maybe not with the 5 stocks you consider when you think of AI?
Well, if you're looking at diversification, you would definitely be looking at the software side of the house. And that's where you're going to be hearing a lot more about agentic AI revenues. We had classical AI, which is 2 + 2 = 4, 100% of the time. Then we got the generative AI, which is 2 + 2 might equal 4. Now we're in the agentic world where 2 + 2 = 4. What do you want to do with it? And it's really about business outcomes. It's about collapsing decisions and trees. It's about automation so that you can make faster decisions. That's where companies are starting to head to. And that's where the sales forces, the ServiceNow, companies are really pushing on being able to deliver that. There's private companies like MoveWorks, which ServiceNow made an acquisition for, Boomi. These are companies that you're building the agents on. And what it's doing, it's driving business outcomes. Can I actually close books faster automatically? Can I actually reach reach out and touch salespeople more quickly? Can I resolve a customer service issue in less time with better resources?